right? Higher high on the price action, lower high on that oscillator. Ladies and gentlemen, Kim here. Welcome to the daily update. Hope you guys had a good day trading. Today, market is down about 0.7% there. On the S&P, Nasdaq 0.4%. Semiconductor, grain, Dow, Russell 2000, transport, banks. These guys are down about 1 to 2%. Energy up, biotech down quite heavily. Healthcare, home builders, utilities, retail, emerging market, every single sectors are red today, except semis and the energy sector there. Bitcoin down, gold, silver miners are also down. Dollar up, oil up, treasury bond down. VIX popped a little bit. Let's do with S&P 500 ETF. Spider! 65-minute chart here. So this is where we close right here. Yesterday, we actually saw a small down gap this morning. You can see this is where we closed yesterday. We opened right here. So in that first hour, we did see that down gap. But on the first hour, quickly, the down gap was filled. However, we were not able to get above that level. And that level acted as a micro-term resistance and the micro-term moving average in the vicinity. Second hour, third hour, fourth hour, we did see that plunge, as you can see there with the 3 red candles. However, the midterm moving average, which it has been acting as very strong resistance for some time now, potentially acting as new support here, at least for the last 2 hours. As you can see, we did see a little bit of bounce right on that midterm moving average. This is very critical juncture for both bulls and bears. Bears, obviously, you do not want to see buyers reprogramming that midterm moving average to support the bulls cause, because if we do see this thing kind of, if the buyers continue to push higher while that midterm moving average start to curl up, then, that midterm sentiment is going to slowly shift to bullish sentiment. And sellers do not want to see that. So what the sellers want to do is make sure that bulls do not utilize that midterm moving average by letting the price get below it. And ultimately, this is where the sellers want to attack and make sure to fill the entirety of that up gap and make a way for new lows, which is going to be 350 or lower. And that's what obviously buyers do not want to hear, none of that. So this is very, very important juncture for both bulls and bears. Right now, micro-term moving average is here, short term. So bulls really need to get above really 372 or so to potentially go after that 375. And ultimately, though, bulls do need to get above that October swing high and make that higher high if they're serious about completely changing this bearish downtrend we've been in this entire year. Check out that oscillator. So this is not gonna be a happy news for the bulls. As you can see, we do have bearish divergence formation here. You can see this is bullish divergence, which we talked about, right? Lower low on the price action, higher low on that oscillator, right? Higher high on the price action, lower high on that oscillator. So, and that's what keeping the price deteriorated in the last couple days here. Not only that, yesterday we're kind of infant stage as far as the bearish divergence was concerned, like right here. Now that oscillator is pretty much rolling over here. And there's a lot of room to go, So if bulls are not careful to get that oscillator cross back up as quickly as possible, we could see 364 or lower from the bears to utilize this bearish divergence formation. I'm going to come back for you. We'll reassess the situation. Enjoy your evening. We'll train tomorrow.